All right, folks, it is Friday, August 14th, I think. Yes, August 14th, 2020. And it's time to talk about why I made the move to cash in recent days. I've posted about it, but I think that a lot of people would get more out of it if I talk through my reasoning. I'm going to try to keep this really short because I can go on forever talking about it. But as it stands today, I am about 42% in cash in my portfolio. I really want to get to 50 to 60% cash. Uh, but I'm having a hard time getting permission to trade some of the holdings that I have. But I was able to move most of it to cash. So it's better than nothing, but not where I would like it to be. Um, I have a couple of reasons for doing it. One of the main reasons is that I have been invested in tech stocks, big tech stocks, for a while now, and they've had a tremendous run. I mean, it's just crazy. And I've gained, in some of my tech stocks, 500% in like, 4 or 5 years, which is ridiculous. As a result of that, they've gone from something like 4 to 5% of my portfolio to like 20% just because of the gains, right? When I started out, they were reasonable size holdings along with other things I have in my portfolio, but over the years they've really gone gangbuster. So it really is time to kind of take that profit and reallocate and rebalance my portfolio. So that's one reason. The other is that I think with COVID-19, we had this massive overreaction when people were selling back in late February, early March, right? Um, I think that going down in the market was very warranted. Don't get me wrong, but the breadth and the speed of it was just crazy. It went down so fast, so quickly that I think there was only like maybe one time previously in the market that had happened, maybe twice, but I don't think so. Not over the course of a couple of weeks. I don't think to go down by that magnitude. Um, so back in March, I even posted about it that I thought it was crazy, and I actually went and bought the Nasdaq basket, so QQQ, the ETF, at like $169 a share or something like that. And that move took all of my cash at the time and bought the Nasdaq. And then since that, third week of March or whatever that was, until even last week, I mean, the Nasdaq has been up 42%, some crazy number like that. So I've made a killing on that as well. But here's the problem for me. Um, just as fast as the market was overreacting on the downside, it has so optimistically overreacted on the upside that it's just crazy. There is no way that our economic fundamentals can support that much gain in that short period of time. So that's why I'm liquidating. So why do I feel so uneasy about all of this? Well, aside from just taking profit and rebalancing so that my portfolio is just not out of whack and I don't have these concentration risks, I just see a lot of uncertainty in the future that I think people are not really pricing into the stock market, right? The whole thing with the stock market is that it is not the economy, and it's not supposed to be. And everybody knows that. It's supposed to be that the market is pricing in future expectations. And I think that people are just blind that the future is going to be as optimistic and as quickly as they think it's going to be, right? I just don't think that's the case. When I look at the economy, uh, I see that unemployment is still high. Yes, July numbers have gone down under the, one, or was it the last week of July, whatever it was that they just reported, probably the previous week, but it went down, under a million new claims, for the first time in recent memory, and that's reason to celebrate. But there's still a shed load of unemployment out there, and it's quite high. Some folks are even thinking that some of these jobs will never come back, even after we recover, right? So unemployment is high. Uh, GDP in the second quarter went down some 32% on an annualized basis, right? We don't know what third quarter holds. It may not be as bad as second quarter, but I'm not sure that we're growing, to be completely honest. So, that part of the economy just sucks. Um, the recovery, I think, is not going to be as fast as people think, even with, a vaccine coming, say the end of the year, if I was wildly optimistic. I don't think 2020 is likely. I mean, I think there's a possibility, but I don't think it's likely for a vaccine. So, I think the recovery, the real recovery, is going to go a lot longer and it's going to be more painful than people are perhaps hoping for. Um, so I'm uncertain about the economy. And then talk about the political landscape, right? Right now, Joe Biden is leading. Uh, if the election was held today, he probably would get elected. We're still some 80 odd days away. Is there a chance that Donald Trump would make up ground? Absolutely. I think he would make up ground as we get closer. Would he get reelected? I think that's less likely, but again, I don't have a crystal ball. So, all signs are pointing to Joe Biden winning the presidency. He has a much stronger position than Hillary Clinton did in 2016. So the polls are not, you know, people always worry about, well, the polls were wrong last time. Well, it depends on what poll you looked at because there were some polls even in 2016 that had Donald Trump within the margin, of error for victory. So I don't think it was really a polling error necessarily in 2016. So, like I said, all things being equal, there's a high likelihood that Biden's going to be the president in the fall. Now, if that happens, the market is not going to price that very favorably, right? A Republican win tends to boost the market, and a Democrat win tends to depress the market. So there's that bit of uncertainty because we just don't know. On top of it, imagine all the chaos if uh, Trump tries to fight the result, right? You can well imagine that with COVID-19, we would have a lot more mail-in voting this time than in any previous election. It just makes sense. And he's already signaled his mistrust of mail-in voting, which means that there's a possibility that on election night, with the result from in-person voting coming in first, that Trump may lead the count. But then Biden will win when all the mail-in ballotings are counted. In that kind of scenario, I can just imagine a total shitstorm. So even beside the point about how a market would react to a Democratic win versus a Republican win, just what would happen between election day and when the new president is sworn in January of 21, I mean, could be a total shit show. And I think people are just discounting that, the market participants. Um, and then lastly, coronavirus, COVID-19. Like I said, I mean, I think that a vaccine is definitely coming. If it comes at the end of 2020, that's awesome news. I would not preclude it. I just don't think it's likely. So I think that it's, more 2021. If you're following, what's going on there are surveys that are saying, a third of Americans wouldn't take the vaccine even if it was available. Okay, it's their choice. I think it's stupid, but it's their choice. But if you have a third of the population not taking a vaccine, uh, that's not going to help you develop, herd immunity. On top of that, even if a vaccine was available, there's this whole question about ramping up and creating vaccines for everybody that wants it or needs it or whatever, right? And we don't know. I mean, there's a story I heard about these glass vials to hold the vaccines are in short supply, and manufacturers of vaccines are trying to secure them with contracts, whatever. But the whole point of that is that there are all these uncertainties, and there's just this huge disconnect, more so than normal, for the market from the economy, right? I think that market participants are anticipating, future returns that are wildly optimistic and are going to come really quickly. Whereas I think we're in this low interest rate environment that can actually go negative, and that there are a lot more deflationary pressures out there than inflationary pressure, which would really put us in a bind. So I'm just waiting for that correction, which I feel is going to come before I, move back in. In the meantime, most of my money is in cash, but I'm slowly looking at long-term treasuries to take advantage of low rates going even lower with bond convexivity and trying to take advantage of that in the meantime. Um, I guess my last point, and I should have lumped this in with the economy, but it really is a separate topic. It's market valuations, right? There are a couple of indicators out there that is showing that the U.S. market is just ridiculously expensive right now compared to historical numbers, and even the world market is getting super expensive. Um, some of these some of these measurements would be the Shiller Cape ratio. Others would be what they call the Buffett indicator, the market cap to GDP. And I think that market cap to GDP for global stocks as a whole uh, has exceeded like 100% now. Like for the first time in a long, long time. And for the US market, it's even much, much higher. Um, so I think that, stock valuations, so forget fixed income or bonds, but stock valuations have just been crazy. And if you really look at not the total stock market, but say, the US market, like the S&P 500, that index, five stocks makes up nearly 22% of the index because it's a market cap index. And when you look at what those five stocks are, it's Apple, it's Microsoft, it's Facebook, it's Amazon, it's Google, right? They have had these huge gains because they're the big techs. And most of the gains in the S&P 500 in recent years have been as a result of these tech stocks, and they're only getting bigger. And because the index is cap weighted, it means that they have an even bigger influence on it. Um, and I just think that it's just too expensive, and people are crazy. So for me personally, I've taken my profits, taken the opportunity because I've been making highs like every day for the last week. It's just so crazy, even with the moves I've made, because I'm still holding some of them. I didn't completely liquidate my tech stocks. I just sold off a lot of it and brought it, into levels I was more comfortable with. It's still gaining, and it just doesn't make sense to me. Anyways, I'm hoping that this is short enough that you can follow it and follow my thinking on why I'm more than 40% in cash in my portfolio. I really want to be more like 60% cash, but I just can't do it. But I'll keep watching and I'll keep posting, and we'll see where things go. But I'm predicting a shit show later this year in the stock market. Let's see if I'm right. All right. Enjoy your weekend, and see you later.